Good morning. Welcome to IG's early morning call. This is Friday, the 15th of September, trading as we await the start of today's European equity markets in half an hour's time. Things looking good after a very positive day yesterday on the markets, pretty much across the board. Wall Street up, Europe up, and overnight we've got Asia gaining as well. Let's take a look in some more detail of the headlines as we lead you towards the start of today's session. A positive start to Friday's trading day. Yesterday we saw the ECB on positive comments suggesting it's done all it needs to do on the upside. And interest rates boosting European markets, London markets getting a boost by the oil price, US markets getting a boost by ARM Holdings IPO, and overnight we've seen some good data out in China. That ARM Holdings IPO up 25% yesterday on the US markets, and that was a very, very good IPO by any measurement, and in fact it's one of the few IPOs this year, and it's done so well. It has given a fillip to the markets. And we've got relief as well on the Asia Pacific markets this morning because of Chinese data out overnight. We've seen retail sales, we've seen industrial production both come through better than expected, giving a boost to markets. So all this exuberance, I think, in the equity markets is all being driven by a drop in volatility. It's triple witching today, which means there's going to be the expiry of futures and options data, which does inject some liquidity, so we could well see a spike on the upside. But look at this. We've got a drop now as of yesterday's close, a candle close, and an entire candle today below that prior line of support, now resistance at 1507. That was the low point we saw back on the 27th of July. And you've got to wind the clock back all the way back to this area down here, where we've seen it lower prior to that big spike, which came through as a result of the invasion of Ukraine by Russia. And then much more further on down, will then be at levels not seen since April 2019. So volatility draining out of the markets. But as I said this morning, we could well get a little bit of a reprieve because of the triple witching, which is due to hit mid-morning as we see those markets get underway. Let's take a look at some of the individual stock markets as we saw that big rise in yesterday's session. Look at this gain we saw yesterday. That was the biggest single day's candle we've seen in some time. Markets up over 2.3%. And we got a gain as well today. And indeed in today's session on the 24-hour markets indicating a stronger start to the trading day ahead. We have completed the total retracement of this Fibonacci that I had drawn on here from the highs we saw back on the 31st of July. We have now in today's session traded at the highest levels that we've seen since the 24th of May this year. So money going back into risk assets, as I was saying, spectacularly yesterday, passing the 200-day moving average on the London markets. The MACD pointing up, indicating potentially that people want to buy into this rally. Now, we'll have to see how far it goes before it starts to peter out. But one of the things in the London markets was oil prices, which I'll take a look at in a moment. Yesterday, big gains on the German DAX on hopes that the European Central Bank has done all it's going to do now on interest rates after having raised rates to a record high yesterday, up a quarter point. As of that meeting yesterday. And we're building on that as well with another update on the European markets. As I said, looking like a strong day across the European session today. Very strong day in the French markets yesterday, up on the session today. Interesting enough, one of the stocks on the way down was Stellantis. I'll give you some more details on this, but basically it's involved in the strike action in the States. I'll cover more details of that in just a minute and the potential implications of that when the US markets get underway later on today. But nonetheless, despite the fact we saw a drop in Stellantis, most stocks up yesterday on hopes, as I said, that the ECB has now done enough. Let's take a look at what's been happening overnight in the Asia Pacific markets, because across Asia, we've seen stock markets rise as sentiment was boosted by a positive economic swing on data out of China and tailwinds from the successful listing of that UK chip designer ARM Holdings on the Nasdaq yesterday. So there's a lot of tailwinds pushing this market up. Positive sentiment coming through from the European Central Bank, giving us a potential insight into what we could well see next week from the Bank of England and the US Federal Reserve. Will they go by a quarter point? If they do, will they indicate that they've now also done enough on interest rates? And that could give an extra little bit of a fillip to these markets. But I think, as I said, overall, the markets in the Asia Pacific region really being boosted by what we've seen in the Chinese markets today with that release of the Chinese data. I want to show you what's happening in Hong Kong, because that's a better performing market. Second day in a row of gains. In the grand scheme of things, it's not much of a move in terms of the sheer size of it, like we saw in the European markets yesterday. But nonetheless, second day in a row of gains for the Hang Seng Stock Index. Let's take a look at the Wall Street close. The Dow jumping more than 300 points yesterday for the best day since early August, as that debut of ARM on the IPO yesterday, giving us a little bit of a boost across the board. And in fact, we saw the S&P 500 and the NASDAQ also up on the trading day as well. Insofar as the 24-hour markets are concerned, just a quick update on where we are. That big 300-point rise on the Dow can quite clearly be seen there. One of the best days we've seen in a few weeks on the Dow, bouncing off this rising line of support has been following, and that really has proved to be a good strategy that we'll be talking about this week on the early morning call. And you've seen a return in bucket loads on that. 34,987, the 24-hour markets having opened at the top of yesterday's candle. We're now pretty much at levels not seen since the beginning of the month of September. But it's these tech stocks that have done best in terms of the rise that we've seen this week. But like the Dow, we've got a trade on the 24-hour markets absolutely at the top or just over the top of yesterday's candle on the NASDAQ. So that's where things are there at the moment. Let me just quickly take a look as well, as promised, on what's been happening overnight in the Chinese markets in terms of that economic data, because we've been talking a lot recently about the poor data coming through from China. Let me just show you what's been happening. Industrial production, retail sales, all coming through better than expected. Just a quick snapshot there of what we had been expecting for industrial production. After a 3.7 reading in July, we had been expecting it to rise to 3.9%, but in the event it came through with a 4.5% rise for August. Retail sales, same sort of thing, 2.5% up last month. This is an economy which is expanding, it is trading, it is showing positive data, but this is better than expected. You can see the estimates have been for a rise of half of 1 percentage point to 3%. In fact, it came at 4.6% retail sales. And the unemployment rate estimates have been there for 5.4%. Up from 5.3%, but in fact it came through at 5.2%. So more jobs having been created. But don't forget the excuse me, the Chinese economy doesn't produce any data out for the youth unemployment, so we can't tell exactly where those jobs have come through from, what they're doing, and where they're being allocated. But clearly there are jobs out there which have been seen to be coming through in the Chinese market. I just wanted to take a look as well at what's been happening on the Chinese currency, because on the currency markets this week, it really has all been about the US dollar. But the USD CNH has seen the dollar down in today's session if we look at what's happening. And it's been a week where the dollar has fallen. This is the Chinese yuan stronger against the US dollar, currently trading near this line of support at 72,680. Let's move on and take a look in some more detail about what we've got a little bit later on today in terms of data out from the States. We've got industrial production. It's expected to rise by 0.1% in August month on month. And the Michigan consumer sentiment forecast to drop to 69.1. Interest rates are high. They are causing pain. We do know that the consumer is under a lot of pressure in the States. Mortgage rates are rising, and many fearing for an increase in fuel bills as well at the back end of this year. We'll just have to see how things move in terms of what we've seen in terms of the economic data out a little bit later on today. Let's take a look at the currency markets. I want to go first of all with this euro-dollar trade, because this was of interest yesterday. This is the euro down heavily yesterday against the US dollar. As I said, the European Central Bank going a quarter point to raise rates to a record high, but indicating that it had probably done enough. Today we've got a little bit of a purchase, a little bit of an upside for euro, but broadly speaking, yesterday we did see it disappear below this total line of retracement on the Fibonacci, taking us back fleetingly yesterday to levels not seen since the 17th of March. And this was as a result of what we saw yesterday on interest rates. Next week, we've got the Bank of England and the Fed on rates. Yesterday, we saw sterling disappear below the 200-day moving average, the first time since the 7th of March, indicating weakness in sterling. And this trend likely to continue. If you're short on this, your stop goes above that area up here at around about the 125 level. 124.29 is where we are. Next line of support, just below where we are, which were the lows we had here back. What was that, on the 25th of May at 123.08. So 123 seems to be an area of support to watch out for if you're short on this market. And that Bank of England interest rate meeting is due to be released with the data out and the news out at midday on Thursday next week. Now, Let's take a look at some of the corporates to watch out for. Got to wind the clock back to after the bell last night for Adobe Systems coming through with fiscal third quarter numbers. It topped Wall Street estimates for the numbers, both the top and bottom lines. The software company reporting adjusted earnings of $4.09 a share. We've been looking for $3.98. Company also reporting record revenue of $4.89 billion, coming through with artificial intelligence, of course, like a lot of these tech stocks, majoring in that, and that's boosting a lot of these earnings. Expectations have been for slightly just shy of that, $4.87 billion. The earnings forecast for the fourth quarter was a little bit better than expected in some respects, but mostly it disappointed the markets. In other words, it wasn't as robust as many had been hoping. And as a result of that, we did see the stock down by 0.5% close. Now, this is not an all-session stock. So you're looking here at the close at $552.59. It is actually down from that point. So because it's not an all-session stock, it's not shown on this chart. But you can see Adobe has had a wonderful rally recently. The stock has added around about 64.5% since the beginning of the year against the S&P's gain of around about 16%. So you can see it's been an outperformance for Adobe. But clearly the fourth quarter outlook had disappointed. It was actually better than some had been expecting, but it was a disappointment. And as a result of that, we did see the stock down just a tiny touch. Got to return to the big stock story yesterday, though, ARM Holdings. The stock doesn't appear yet on the IG platform, but it will do after today's trade. I think it's because it needs a full days of trading before we can get a chart underway for you. The chip design company, which is based here in the UK, it's listed on the NASDAQ, controlled by SoftBank, jumping nearly 25% yesterday during the first day of trading after selling shares at $51 in its initial public offering. At the open, ARM Holdings was valued at almost $60 billion. Not 54 billion. The company trading under the ticker symbol ARM sold around about 95.5 million shares. SoftBank, which took the company private in 2016, controls around 90% of shares outstanding. On Wednesday, ARM priced shares at the upper end of its expected range. On Thursday, the stock first traded at $56.10, ended the day at $63.59. It's a hefty premium for the chip company at $60 billion valuation. ARM's ARM's valuation, price to earnings multiple, would be over 110 based on the most recent fiscal year profit. That's comparable to Nvidia's valuation, which trades at 108 times earnings, but without Nvidia's 170% growth forecast for the current quarter. So the big question for me is, have investors got carried away with what they have been expecting, what happened yesterday? We'll have to see. Time will tell. And when the company starts to produce earnings on a regular basis, we'll have to see how things level out. But we do know that tech stocks do carry a hefty premium, as we've seen there. Anything over 100 is an enormous premium to any share trading on the charts. Now, some negative news out overnight for auto manufacturers. Today on the US, they're likely to be hit by strike action. United Auto Workers, the UAW, has launched a series of strikes there after there was a failure to reach an agreement with three of the largest auto manufacturers in the States over a new contract, kicking off the most ambitious industrial labor action in decades. Now, the deadline for talks between Ford, General Motors and Stellantis, the three biggest automakers in the States, it expired at midnight overnight, with the sides still far apart on the union's new contract priorities. The strike, which marks the first time all three of the Detroit three car makers have been targeted by strikes at the same time. UAW President Shawn Fain said he intended to launch a series of limited and targeted stand-up strikes to shut individual auto plants around the world. Let's take a look at the reaction late last night. This is Ford. All sessions on the IG platform closing down 1.35%. This news has developed overnight. This stock will start trading again at 9 o'clock this morning, so I expect a negative swing. If you do get a negative swing and you want to take part in that, your stop goes above yesterday's, prior day's tall candle, just below the $13 mark. Ford, General Motors, another one to watch out for today. That was down 1.25% yesterday. Again, same sort of thing. If you want to put your stop loss just above the candle on the Wednesday, at around about the $34.40. 33.35 is where we're starting now at General Motors. And Stellantis, now this trades in the French markets, although it's mentioned as one of the big automakers in the States, because it owns a number of the companies wound up into Fiat, such as Chrysler and other car makers. 1763 is where this stock will open. Second day in a row of losses yesterday. This stock will open at 8 o'clock this morning, UK time, in the French markets. That's local time, 9 o'clock. But that will have a reaction to the news out overnight on those strikes. Now, let's catch up with what's happening in other areas of the market. Let's take a look at oil, first of all, before we take a look back at what's going on with things in Baker Hughes rig count today. It's been a tremendous rally. Look at this rise. 90.35 is where we are at the moment for US crude. And you've got to go all the way back to the 8th of November last year when you get that line of where we were last at these levels. That's the next line to watch out for in terms of resistance, 92.95. If you are long on this, as we've been talking about all week, keep your stop loss coming up underneath to give you some sort of protection. Brent, next stop off point is going to be up here, which is pretty much the $100 mark, 93.89. That's technically, of course, so keep your stop loss coming up underneath. We'll be covering all this next week in the early morning call. Just a quick reminder, last week the Baker Hughes rig count rose by 1 to 632, number of oil rigs climbing 1 to 513. That 632 includes gas rigs as well. So that was what we're looking for. We're looking for a 6 o'clock break tonight on the Baker Hughes rig count. Just want to go back to the charts and take a look at what's happening on gold. Up for a second day in a row today. Nice little rise up at 19.18. And the other area of the market is base metals. With that good news coming through from China, I thought I'd take a look at copper. China economic data out overnight. I know it's retail sales, but industrial production was pretty good. 84.85. We've got a positive week overall for the price of copper, and it's been one of the best weeks I think we've seen for a few weeks on the price of copper, and that looking as though it could well end the week on another high. And that is it for me. 15 minutes to go before the start of today's European session. Looking for gains across the board today after yesterday's gains across the world. Saw a rise on the markets. Be interesting to see how things develop further on today. But next week is really going to be pivoted around the Fed and the Bank of England interest rate decisions. So that could be the next headwind for these market. Depends there on what happens and some of the rhetoric around that. But at the moment, at least, looking as though we're going to get a positive end to this week. We're back at 10:30 with Charting the Markets.